Thank you for viewing this video. In it, I hope to show you one of our better trading strategies. We've gotten so many customers from YouTube, I've decided to put up more content that teaches you guys how our strategies work and how we make money. This one's called the 4-hour stat Forex trading system, and the rules are simple. We sell the 4-hour statistical high, we buy the 4-hour statistical low. It's as simple as that. We also use our Forex multi-map and heat map to let us know when this trade's likely to work and when it's not likely to work. We can adjust our entry and scaling levels accordingly. If you're interested in getting our software for free, we'll give it to you. Just trade at one of our supported brokers. We'll even pay for your eSignal data feed. Alright, let's get on to the course. Pound US dollar. This blue line right here is the 4-hour statistical low. The orange line on the top is the 4-hour statistical high. The dotted line is the 95% likely high for that hour. This dotted blue line on the bottom is the 95% statistical likely low. This is the Forex heat map as we discussed in other videos on here. This shows that the pound is weaker than the euro, the Swiss franc, the yen, and the Canadian, and at this point significantly more so. The FX multi-map takes 11 different currencies unrelated to this particular one to predict which way this currency will move. For example, if the pound's weaker, as you can see above, than all the other currencies, and the dollar's stronger than most of the other currencies, the FX multi-map is going to be really weak. This currency is going to go down. So our strategy is we buy the 4-hour low and we sell the 4-hour high. Here's the 4-hour low, and you can see that the FX multi-map is around minus 30. Anything under minus 20 is weak. So right off the bat we know this trade is not likely to work, and the dotted line here, the red line, is the previous day's low. The market just broke down underneath the previous day's low. That's usually a very bearish sign. The market oftentimes goes significantly lower. However, the market hit our statistical level and stalled here for about an hour, 40 minutes to an hour. So if you got in here and you scaled in, which is what we teach in our class, you can see your average price would have been around 75 and the market went up to about 85. You made 10 pips on the first trade. Let's scroll into the future and see what happened. The market also hits the 4-hour statistical low here too. The market's a little bit less weak than it was before, minus 20 versus minus 30, and the market shoots up about 15 to 20 pips. Our trend reversal signal here tells us that the market's probably gone up enough, and of course it reverses and comes back down. At this point, this is a very safe trade. The market double bottoms. You can see that the weakness is less than it was before. This is a safer trade than the previous one. We also have our 65% probability band here, which is very likely the day's low. The market shoots up. During the next couple hours, the market doesn't hit the 4-hour statistical high, nor does it hit the 4-hour statistical low. Our probability band and the support levels down here show that the market's weakness is no longer in play. And you can buy the triple bottom down here at 40 and make 17 pips on that move too. Because the last move up here had plus 15 strength and the weakness was only minus 10. Very clear which way the market's most likely to go. And you can see price also was contained by our 4-hour statistics during this period right here.